Hey everyone, Wilfred here. Welcome back to the channel where we break down the secrets to building wealth and achieving financial freedom. Today we're diving deep into different assets that can help you build long-term wealth. We're talking stocks, real estate, even things like Bitcoin and farmland. So if you're ready to explore the world of investing and discover the potential avenues to grow your wealth, buckle up. Let's get started. Let's move on to bonds, a crucial part of any balanced investment strategy. When you buy a bond, you're essentially lending money to a government or corporation acting as a creditor. In return, they promise to pay you back the principal amount, plus interest over a specified period. Bonds are generally considered less risky than stocks, as they offer a fixed income stream and lower volatility. They're like the steady eddy of the investment world, providing stability and predictable returns over time. Bonds are a great option to diversify your portfolio and balance out the volatility of the stock market, ensuring steady growth. Now let's talk about mutual funds. These are essentially baskets of stocks, bonds, or other assets managed by professionals. Mutual funds allow you to invest in a diversified portfolio with a single purchase. This diversification is key because it helps to spread your risk. Mutual funds come in all shapes and sizes, from those focusing on specific sectors to others that track the entire stock market. Next up, we have ETFs, or exchange-traded funds. They're similar to mutual funds in that they offer instant diversification by tracking a specific index, sector, or commodity. However, unlike mutual funds, ETFs are traded on stock exchanges just like individual stocks. This means you can buy and sell them throughout the trading day at real-time prices. ETFs also tend to have lower fees compared to mutual funds, making them an attractive option for cost-conscious investors.
Let's move on to something a little more tangible. Precious metals, the timeless assets. Gold, silver, platinum. These shiny objects have been a store of value for centuries, trusted by many. People flock to precious metals, especially gold, during times of economic uncertainty and financial instability. When the market is crashing, gold tends to hold its value or even go up, providing security. Precious metals provide a hedge against inflation and a way to diversify your portfolio effectively. You can invest in precious metals through physical coins and bars, ETFs, or even mining company stocks, diversifying your options.
Now, for those of you who like a little more excitement, let's talk about cryptocurrencies. Bitcoin, Ethereum, Dogecoin, these digital currencies have taken the world by storm. The potential returns in the crypto market have been astronomical, with some early adopters becoming millionaires practically overnight. But here's the catch. Crypto is highly volatile. The price can swing wildly in a matter of hours, and there's always the risk of scams and regulatory crackdowns.
Next, we have collectibles. This category is for those who appreciate the finer things in life. Rare coins, stamps, vintage cars, art, you name it. Collectibles can be a fun and potentially lucrative way to invest, especially if you're passionate about a particular niche. The value of collectibles is driven by their rarity, historical significance, and the ever-fluctuating forces of supply and demand.
Let's move on to intellectual property. This asset class is all about owning your creations, patents, copyrights, trademarks. Think about the iconic Apple logo or the catchy jingle from your favorite commercial. If you're an inventor, artist, musician, or entrepreneur, protecting your intellectual property is crucial for building long-term wealth. Now, let's talk about commodities. These are the raw materials that form the backbone of the global economy. Oil, gas, gold, silver, agricultural products. Investing in commodities can be a way to diversify your portfolio and potentially hedge against inflation. Next, we have private equity, which is a bit more exclusive. This asset class involves investing directly in private companies or funds that buy, improve, and sell businesses. Private equity is typically reserved for high net worth individuals and institutional investors due to its high minimum investment requirements and limited liquidity. Let's move on to peer-to-peer lending, or P2P lending for short. Through online platforms, you can lend money directly to individuals or small businesses, bypassing traditional financial institutions. P2P lending can offer higher returns compared to traditional savings accounts or bonds, but it also comes with higher risk. You're relying on the borrower's ability and willingness to repay the loan. Next up, we have farmland. Farmland is a finite resource that's essential for food production, and it's been a reliable wealth-building asset for centuries. Investing in farmland can provide a hedge against inflation, generate passive income through crop sales or land leases, and offer potential appreciation in value. Plus, there's something incredibly satisfying about owning a piece of land that produces food for the world. Let's talk about REITs, or real estate investment trusts. REITs are companies that own, operate, or finance income-producing real estate. By investing in REITs, you can gain exposure to a diversified portfolio of properties without the hassle of being a landlord. REITs are required by law to distribute at least 90% of their taxable income to shareholders in the form of dividends. Finally, we have index funds. These funds passively track a specific market index, such as the S&P 500 or the Dow Jones Industrial Average. This means you're essentially buying the entire market with a single investment. Index funds are a great option for long-term investors who want to minimize fees and avoid the emotional roller coaster of trying to time the market. So there you have it, 15 different assets that can help you build wealth and achieve financial freedom in the long run. Remember, the key is to find the right mix of assets that aligns with your risk tolerance, investment goals, and time horizon. Don't be afraid to start small and gradually build your portfolio over time, step by step. Investing is a marathon, not a sprint. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more insightful content. See you in the next video. Stay tuned for more tips.